All right, U.S. interest rates, level 4 charts. So I just showed you the special that we're running for our level 4 charts, and I want to take it a little bit further because I think this is very important to look at. I said earlier in the show that we see interest rates moving up. That would be the Treasury market futures moving down. The likelihood of that happening, I'm going to show you, I think is quite high for a couple of reasons. The market is, the stock market is in my opinion, more susceptible to an increase in interest rates than it has been before. And we're seeing signs of that in the stock market and in other markets. As interest rates go up, the stock market has tended to not like that. And an example of that is today on September 10th when interest rates started to move up and the stock market reversed to the downside pretty strongly. So the overall picture that we're going to show you in here, and I'm going to look at a long-term chart also, is a spike into mid-2020 for the interest rate market. And again, we don't really think that the stock market or investors are going to be pleased about that if that does happen. Let's take a look at our level 4 charts. Now, we have, when we share our 84 top traded symbols in our focus list, they come in the form of chart grids where we have multiple time frames and different charts on there. The futures and index charts have more on there even than we have on the symbols of the stocks and ETFs. Here is what a grid looks like in here, and I know this is messy. This has right now analysis on the ZNs, the TLTs, the ZBs, and the TNX, the 10-year. And there are 4 different charts in each one of those. When I blow this up, you're going to see that it's very clear and you can see it. And then there's an arrow that you can move through it very easily. So I'm going to maximize the sell on 10-year yields. This is TNX, and you can see now, you can see it very clearly. And there's an arrow up on top that I can just go back and forth, and it advances to the fully expanded chart on each one. So this is the weekly chart on the 10-year yield. And of course, there was a big decline in yields right in here. And then as the market continued to move down into this period in March 20th, that was reflective of the pandemic panic, and interest rates fell very hard as the Fed reacted. This was a period where we got down to just 39 basis points on the 10-year, which was incredible. These lines, these vertical lines, show you the actual lows, the actual time frame on the cycle bottoms. These are the cycle brackets, which are ideal cycles. In other words, if they were perfectly making the bottom exactly at the right time, then that's where they would show up. And there's a minor cycle and a dominant cycle. Look at how incredibly close the real lows were to the ideal lows. So that creates information for us. On top of that, we get more information by the fact that there's a configuration in here that the low here is much higher than the low here. When you get a big decline in any market and then you base, the probability is high you're getting a reversal. And here you could see we got the reversal upward in interest rates. So this was a positive cycle. This shows you also a positive cycle. This is called a right-hand translation, where there is almost no declining period right over here. It's also what we call a swamped cycle, because the upward component in here, the directional component, the money flow forces, were so strong it would not allow the correction in here. That's different than this cycle here, which declined as it should. And you could see the declining phases right over here and right over here and right here. This super strong sets up this big rally. And then we get interest rates falling down again that is in alignment with the Delta variant of slowing down the economy again, and thoughts that, well, there maybe won't be a taper, or the Fed could stay loose for longer. But now we're right here, we're in this rising phase, and you see momentum turning up, and that confirms this bottom. This is the beginning of this rising phase, and what that says to us on an intermediate basis is that interest rates are likely to move up. The resistance levels right over here, this is 1.45%. That's only another point on the upside. This right over here is at about 1.52%. There's 1.63%, and this cycle peak up at 1.76%. So right now we're in this period where this minor cycle might exhibit some little downward force and choppiness in here, but then we think interest rates are going to be spiking up again. Part of this might be a time period right in here where the stock market gets a little sloppy and interest rates maybe come down as a little safety bid comes in the futures, but we think there's a spike right out over here, and that really could be in alignment with a very big break in the Treasury futures market. So I would say minimum upside projection as we look at it here in coming weeks is this is October right over here, and this would be around the 1.52%, sorry, in that level. That would be a pretty good upside move in interest rates and decline in the bond market. I'll show you that. So now we're going to move to the daily chart right here and look at this phenomenal chart. You have actually what we call out of phase cycles in here. In other words, there's a minor cycle and there is a dominant cycle, and when they nest together you usually get, some important bottoms like you did right over here. When they're both moving down together like here and here, you got two lows that pretty much hit that expectation, and now you could see what happened was that the trend in interest rates is picking up. Here it looks like just a few days where the interest rates could be a little sloppy, and then another potential uptick. So this could get you right up into that 1.5% that we're talking about right there. So interest rates right now are in a short-term uptrend, as you can see, and the cycle patterns are suggesting that sometime in the next few days both of these will bottom, and then you're likely to get a move to the upside right in here that could be pretty sharp over the very short term. So we think that there's a buy area in interest rates, or essentially a sell in futures coming up when you look at that. So that's a look at the weekly and at the daily. Now let's look at, before I get into that, I want to show you right down over here is our option bias study. So the option bias study gives you different information in here. When it's down over here and red, very red, it's very negative, and the probabilities are high of getting a decline in the market or continuing to move down. You started to get neutral readings right over here, and now our option bias study is becoming positive for interest rates. It's been there for about the last week, and I think a little correction in here won't change that. So this gives us a sense for, and we developed this for option traders, but it works on everything, a sense that you want to bias your positions for long interest rates or short futures, of course. So now let's look at momentum conditions and the slim ribbon PO. So you could see as interest rates were moving down right in here, what happened was the slim ribbon was configured negatively. And the slim ribbon tends to be support and resistance. As you can see, the slim ribbon PO is your signal indicator, and this was telling you interest rates were falling and continued to fall. Things began to change right over here, and now you're getting positive signals on interest rates on the short term. This is the daily that we're looking at, and this is suggestive of the fact that interest rates are going up. Momentum conditions are supportive of that. So you have it not only here going in the option bias indicator, but you have it here on the momentum conditions saying interest rates are going up. Next, or the last thing, is the 2-hour chart, and on here we have our MCI, market condition indicator. It was negative over here for interest rates, as you could see, but then it began to improve, and it began to test what's called the swing zone. Now, our level 4 members get all of these indicators. and it's now moving up here, but it has to break above the 25 to be positive. In the meantime, you're not getting any great signals right in here, so this is not offering a lot for trading. Now, for short-term traders, we like this this chart time frame and these indicators for your directional decisions. Right now, TNX is not giving that to you. So that's a look at the interest rate structure. Now I want to look at the futures as we look at the same type of charts in the ZNs, and those are going to trade opposite to what we see in the interest rate market that I just showed you. And here is the weekly chart in ZN. So what we're looking at here are just fantastic cycle harmonics that you see right in there. You had a big nesting period coming right in here. This was a super strong period for the futures market. It corrected right into here and then rallied, gave you a double top, and then had a breakdown. And this said interest rates were about to increase. And we were all over this when we saw that. You could see our message here, cycle low support. Breakdown confirms a major top is what that says. Let's see if I can blow that up for you a little bit in there. So it broke below the level that confirmed the major top. Here you have this cycle right in here, which is the TLT and the ZBs. And there's a little shorter cycle here that the ZNs were following, but now they're in line with the longer term further out the curve. And here's your support area. What it looks like to us is the next few weeks you're going to get a downward move in the ZNs. That's that upward move that we just talked about in interest rates. Then you get into a period where they're likely to bounce out over here, where interest rates would be falling, and this would be out into maybe November, so late October, November right there. And then here's that huge risky period that takes you out into 2022, way out into potentially mid-year or longer. I'll show you why mid-year in a moment. But this takes you down into January right there. So we think that there is a big decline here in the treasuries, a big increase in yields, and that coincides with that upward spike that we're looking at in the TNX, or the 10-year yields. Let's advance this now to the daily chart. Look at the head and shoulders top forming in there. This is the resistance level. Now I want you to see cycle analysis is why chart formations form. It's what creates them. Here you can see the left shoulder, head, right shoulder. When you get a rally that comes all the way down and gives almost all of it up in the cycle, it says that you're likely to fail in the resistance area, which you're doing right in here. We've got a little bit of an uptick going on here, but overall what we're looking at is a potential large break out during this time frame. So like I said in the weekly chart, we're about to get a few weeks on the downside. That, if this head and shoulders breaks, so the cycle low support is at 132.23 in the 10-year, it's likely that it's going to move down over here to about 130.5, which is the head and shoulders top measurement. So this is a very weak pattern. This is why a right shoulder forms, as the upward component that was moving it up now becomes a negative component in here and begins to move to the downside. Take a look at momentum, and you can see in here the positive momentum and the slim ribbon PO that was, wow, I showed you the opposite of this in the 10-year yield, pushing up, and you can see all of the powerful signals in here. Then it began to get choppy. It is neutral right now, but can soon turn negative, and that's going to be a key thing when that does turn red. On the 2-hour chart in here, this is a little higher quality than what we saw in the yield chart, which gave you the sell signal right over here on the slim ribbon, gave you the downside confirmations, and here as it continued to move to the downside, and now again is neutral. This is the market condition indicator in here is now testing the area of the swing zone and still not getting any signal in there. I think it's going to break below there and give you that significant break. Again, let's go back to this chart over here, and you can see the daily chart, and what you're getting here on the I'm just going back so you could see what you're getting over here on the option bias indicator is this negative condition right over here that you can see, what you look over here is that you're neutral, probably leaning to negative any day, and over here you've been trading negative to neutral on the ZNs. Everything I just showed you in here is in alignment with the likelihood of a downward movement in the futures market and an upward movement in the interest rate market. Like I said, our minimum upside for the near term is about 1.52% on the 10-year. That's the patterns project down to about 130.5 on the 10-year future. We have all of this analysis, by the way, on the 20-year, the TLT, and the 30-year on this same chart grid that we have right over here. So if you become a level 4 member, you'll be able to see all of our proprietary indicators on the on everything that we have in here. The 10-year I just showed you, the TLT and the ZB. So in case you trade all of those, you'll get those. So please do become a level 4 member, and you'll see that. That's the my analysis for the short and intermediate term. I want to back that up a little bit right now and pull in a chart right here, which is the TNX. Whoops, where did that go? Let me just try to get it in the right place for you right here. And this is a monthly chart of TNX. Let me get this in place. A little bit challenging right there. So I'm going to move this out to a time frame of max. Okay, we've got that right. And I want to show you this amazing cyclicality that we're looking at here. So what we're looking at is a chart that goes back into 1997. And you see the dominant cycles right over there, the blue ones, and they show you the time, where those bottoms would come. You could see that key bottom came right there, where all three of these cycles in these harmonic families nested. Each time you get into this intermediate nesting period, you get into a rising zone. Each of those rising zones or phases lasted between 6 and 28 months on the upside and moved up at least to the 50% retracement level for yields. So we're in nearly a 40-year bear market in yields, and we have nothing that really shows us that bear market has ended. All we know right now is that yield started to move up, as you could see right in here, and the likelihood of that continuing is very high. Now remember that every single one of those got to the 50% retracement levels or higher. This one did not get there yet. And the probability is when this minor corrective period is over with, it could be right now or it could be over here. I think it's going to be more likely sooner based on all the other analysis. Then right up over here would be about a level of 1.80%, potentially up over here to about 2.17%. So this on the monthly chart says that we're going to see a pretty sharp advance in interest rates still, which has begun and has paused now for the moment. You can actually see right over here it did something similar, paused, and then interest rates exploded. Right up here got a rally, paused, and then interest rates exploded. So that's really what I think is the highest probability here for the longer term. By the way, for those of you that are students of our work, you will see that there is a 22-month cycle, a 44-month cycle that takes up 2 of the minor cycles, and a 66-month cycle that takes up 3 of the minor cycles. It's beautiful harmonics that we have in there, and that upward projection really says expect about 1.8% over coming months, maybe even up to this 2.2% level up over here, and that would take you out into mid-year of 2022 and may coincide with what would be upsetting the stock market as interest rates are moving to the upside. So that's a look at the long term as we continue this examination of interest rates and why I think they're going to be moving up. Again, do become a level 4 member and you could request that monthly chart that I just gave you. So that's it for this special that I'm bringing you on U.S. interest rates. and I think that the information is pretty compelling on these patterns that interest rates are very likely to be moving to the upside. This is our level 4 special trial. This is for first-time subscribers and upgrades. What level 4 gets, and this is really an advanced level, is our annotated charts. That's our entire focused list live on your thinkorswim platform. If you are not a thinkorswim member, you can go to our site and you can open an account there, and then that would be great because we get credit for that. So thinkorswim TD Ameritrade is our preferred broker, and we'd love you to open up an account there to get our annotated charts. This is all of our analysis. On top of that, you get our proprietary studies, our option bias indicator, the market condition indicator, and you're going to get the grids that we have with 4 different time frames with our indicators on there. It's just incredible. You will also get the archive with all of our grids, with our trade ideas that include the slim ribbon PO, the reversal scout. Nobody else has these. These are our proprietary indicators that keep you on the right side of the market and give you an understanding of the market that it's really hard to get with any other combination of studies. You will love this. You'll get our free live events, webinars, trade planning services, best practices for utilizing askSlim custom charts and studies. And you'll get our full membership access to everything in level 3, 2, and 1. There is too much for me to tell you about there. You can go to the website and see everything that is included. This is a special 3-month trial. Level 4, 35% off for quarterly. That are normally we're at $159 a month, but you can have it for $101.25 a month for signing up for 3 months for level 4. All of this, these live charts, absolutely great. And there is one more thing that's really important. Our level 4 plus is a little bit different. This is, again, for first-time subs and upgrades, and we only have 10 spots available. Last time we did this, you have to get on a waiting list, and we had a huge waiting list, and we filled up in a couple of days. So we now have gotten better at it. We have these spots that have opened up, and we are going to take 10 more people. So what you get are custom chart requests. Everything that we showed you in level 4, you get, but you'll be able to ask us for our cycle analysis on any 2 symbols per week of your choice. You'll get the askSlim daily and weekly charts to open up on your thinkorswim platform, and you'll be able to see these specific symbols that you have interested in that we have provided to you, that has our cycle analysis, timing, key levels, projections, all of that. And you get access to the full archive of all the requests of all of the level 4 plus members. So we get tons of those every day, and we post them and we share that analysis. It is one of the greatest resources of analysis that you will ever see. There's like 5 or 10 new ones up there a day. It's just crazy how much information this is. And you get our exclusive trader support from the askSlim analytical team. That's Matt, Harvey, and I. We have, I have 47 years of experience in this. These other 2 guys are incredibly skilled. You can ask general questions around trading issues, trade planning, and chart analysis. And you get the full access to everything in level 4, 3, 2, and 1. This is normally $239 a month because you're getting our one-on-one help, and that's why we have to limit it to the number of people that we take, and we only have these 10 spots available now. So the special price on that now is $465. That's only $155 a month. Imagine paying an analyst, somebody who you had that type of access to. With our experience, you could never get it for this price. So you can only use this special one time. $465 for 3 months, $155 a month is what that comes out to. You must reserve your spot because it's going to be first come, first serve, and I'm telling you it's going to fill up quickly. So write to Matt at askSlim.com. If you're not a TOS user, you don't have a the TDA Ameritrade account, then please do open one up through our site. Just a little example right over here. This is what a custom chart looks like. Somebody requested that, so this just recently got posted up on our site for the level 4+ members. This is on target. You get the weekly analysis, and you can see the dominant cycle, the minor cycles, the important support areas. We talk about the configuration of the cycles, projections, the momentum indicator that's in there, and you can see in here in target, this is pointing to a correction coming in the next month. But this is a bullish pattern and then likely moving up again. Here you could see on the minor cycle on the daily, momentum has turned negative. The slim ribbon PO giving negative signals. So negative momentum here, likely decline over here in target. And this point shows you where the next date is, where there's an alignment between the daily chart and the weekly chart. Nested area right over there. This goes out here another 3-4 weeks. And that will likely be a point where you could start looking at the support zone and where to buy it. This is a just unbelievably great way for you to get a feel for stocks that you probably will have never had before, and ETFs and futures. We do it all. We look at 24+ different futures contracts and market indexes, plus well over 400 stocks. Plus we'll bring in anyone that you ask us for that we can do this kind of analysis. So this is that great example of that. Please do go to askSlim.com, get yourself on this waiting list, reserve your spot for this level 4 or level 4+, or you could just sign up for level 4 right now. And you won't have the one-on-one custom support from the team, but you'll get everything else also. And again, there's great charts that you see right over there.